and welcome to Web Summit Rio. My name is Gustavo Ribeiro. I'm joined by Rodrigo Comazzetto and Richard Zeiger. So
I'll stay here.
we're going to talk today about what investors want, what they're looking for in a pitch meeting. So let's just delve into the conversation. Hello, Rodrigo. Hello, Richard. So let's start by, if you can tell founders here, what are the first thing you're trying to assess when a founder comes into your office to pitch you with an idea? Rodrigo.
Oh, well, I think that the first contact is you get to know somebody. It's a normal interaction. So when you first meet someone.
Hi, how are you? Nice to meet you. How are you? Good. Hi.
What's going on? Sorry. So when you're first meeting someone, you try to see what the person behaves like. But specifically when I talk to founders, what I like to see is like the energy, the authenticity of the person, you know, because the most important trait for this guy is that he needs to convince a lot of people that his dream, his objective is something that it's important for other people to spend time on it. So he needs to convince for future employees, future clients, investors. So I really like to see this energy, the authenticity in this first interaction.
What about you, Richard?
So venture capital is like a people business, right?
For sure.
And I would say that 80% of our decision-making process is based on the team that is right in front of us. What I try to access, like really in the beginning of those meetings, are basically three things. Like the first thing is, why are they doing it? You know, what is the root cause for them to be venturing in that specific sector? The second thing is, as a team, if they are complementary to each other, do they have the skill set to work together and to really go there and challenge the current status? And the third, which is more, I would say it's more rare, I always ask myself if I see myself working for those entrepreneurs. And I need to see myself like working with them along the journey. It's a marathon. You know, you're gonna be for 3, 5, sometimes like 10 years.
Yeah.
So I wanna, you know, really feel that, okay, I see myself working for them, you know. That's very important.
And just a segue to you, Richard, what is something that a founder does during a pitch meeting that turns you off immediately? Like, what is a big no-no for founders?
Yeah, there's one thing that takes place before the meetings, which normally turns me off, and I think that maybe also Rodrigo, it's when they come with M&A advisors, you know. When they come with consultancy firms, especially the large ones, not to mention names, but when they come with consultancy firms and advisors for a seed round, that it's almost like a red flag.
Why?
And because I think that the essence, the main job of an entrepreneur is like, will be fundraised for the rest of the journey, right? So that's a skill that he must, if he doesn't have, he must learn.
Yeah.
So if the first time that you meet an entrepreneur, you're gonna, you know, you meet the advisor and not the entrepreneur himself, it doesn't send you a good message, right? So I tend to turn off those first, you know, those opportunities normally, you know.
And Rodrigo, when you're getting interested in a startup, what must already be in place before you even ponder an investment?
What's already needs to be put in place. Since we're a firm that invests all across companies' maturity, so we invest from seed rounds to companies in the capital markets already with in IPOs. So it varies a lot. So we'll take the two verticals that are early stage and growth stage for venture capital. Understand that we need to see a thesis that makes sense in the earlier stages. I need to see a stellar team. it's a people business. Everybody says that. It's a buzzword, you know, but it's
true.
It's true.
It's true.
It's true. Everybody says it because it's true. We need to have a stellar team that makes sense. The guys complement each other, and the main two pillars should be that. And on the other side, the growth. We need to see a little bit of, unit economics that are pointing upwards, and we need to see traction, and we need to talk a lot with clients to understand the product, not only the product engineering, but the product in the market. So when you go from early to growth, there's a little bit of more traditional company spice in it.
Do you agree, Richard?
Yeah, totally. We also have a different layer, an extra layer. As MSW we are specialized in corporate venturing. So our LPs are mainly corporations, such as Embraer. I see a friend over there from Embraer, Caio, Banco do Brasil. So we have to add this layer about what the corporations want in terms of innovation. So, of course, the KPIs and all the cap table, market size, the product, scalability, all this menu is a must. But on top of that, we need to really understand how the corporation will work together with the startup and will generate value for both of them, right? So this is like a very important layer for us in terms of how to access deals.
And you mentioned KPIs. So my next question to you is, what are common mistakes you see in pitch meetings, especially for
I'm the
founders
co-founder
who
there.
are technically strong,
I founded it's a non-profit
but
space
commercially
to nurture
inexperienced?
innovation.
I'll try to speak with someone else
Next
speaking with me, but
you should know really close to Joby.
I would say that
It's a
one
16
big mistake is that
100
when founders want to
in the
speak
middle of
so
the
badly,
we have companies,
they don't
we have
hear you,
funds.
right? I've been on pitch, on pitch sessions that the founder was he wanted to expose his business so badly and give his presentation that he would, accommodate for a question. And I think that a very important part of the role of the entrepreneur is to be always questioning. So he must be able to make good questions, but also to hear our questions.
Yeah.
The more we question, a pitch or it means that we are more interested, right? So this is one common mistake that I see a lot of founders. Another mistake is when they want to articulate or try to generate a fear of missing out in the first meeting, like I've already talked to this investor and this other investor and this other investor, and this also, it doesn't, it's not a good signaling. When they start doing that, I always say, please don't tell me. This is our first meeting. I want to learn about your business. You don't need to say who you're talking to already. But in essence, we are in this business for about 10 years.
It's a big challenge for the asset class.
And I see the entrepreneurs like really, really, really improving in Brazil. They are much more educated when they sit down in front of the investors. Like they become much more educated. Like for every 10 pitches that I will hear, I will probably want to go for a second meeting with 3 or 4, 2 or 3. But in the past, it was very different. It was much, much harder, to want to go for a second meeting, right? But
do you credit that to better business plans, better ideas, or founders who are?
It's both.
The market's more mature.
More mature, exactly.
Yeah.
The ecosystem is more mature, So they've learned.
We learned a lot.
We learn a lot, totally.
And what about you? Because you might see very different types of founders.
No, a lot.
What are the?
But specifically,
Muito
got specifically the technically focused guys.
Você tem?
They're guys that are very focused on the product, so they love what they do. They love the solution that they developed, and they don't give the same, or they should give more importance to the market or the client that they are going to, the problem that they are solving. But normally the technical guys, the guys that they have a heavy academical background, or they are very good engineers, software engineers. They're very focused on the products. They tend to be less prone to look into the commercial side, because for us, even in early stages, having commercial proof is very important. You know, validate the product. Would you buy this? Like there's a lot of big companies here in Embraer, like Richard said, Embraer, a lot of companies. Would you buy that? Did you have the interest of going there, looking for a director in that company, ask for that? Because the commercial proof sometimes is more important than the product itself. We're not looking into the core of engineering in the first meeting.
Okay. There's one thing that is also common. Because we had a lot of liquidity in the period of 21 to 22, and a lot of money in the venture flowing for venture capital, you could see when a founder have more joy talking to investors than to potential clients and customers. And this is also something that it's not real, because in the end, raising money is a consequence of how good you are solving the problem and solving your clients' needs. You're not there to solve the investors' needs, right?
Yeah.
So some founders got the skill set of fundraising very, very well, but in terms of operating a business, it goes really different. And, so one thing is our role as investors also is try to observe if there are good operators, and because you got to get things done. This is a business of getting things done. It's execution, right? So meeting investors, you're probably going to meet like, if it's a good business, you're going to meet like 10, 50, 100. You may as well raising money, but raising clients that will sustain your business for the long term, it's what it really will succeed, make a company succeed.
And I mean, you mentioned, Richard, that a lot of founders come with a lot of questions. So my question to you both is, what are the most interesting questions founders have raised to you? Because it's both you and the founders are assessing each other to see if it's a match, right? So
totally.
Which kind of questions gives you a light bulb moment saying, okay, this guy might be different?
Okay, well, I can go for I think that it's a mutual, we're getting to know mutually, and normally the investors that get my eye are the guys that go deep, and they ask to talk with some of our older investments, and sometimes they don't ask because you have a bias. You talk to this guy. He gave me 60 times returns, but they never show the guy that went bankrupt and was like a very hard journey. But in the end, the guys are that they are most interesting are the guys that ask the hard questions. So when that happened with that company that went bankrupt, what was your mindset? What happened? What did you do? Why that happened? Because the guy said that. So the guys go deep. I really like when the guys go deep, because there are no surprises when we are in the real deal. We get to fight, and we get to have stress before we sign the marriage contract.
And Richard, what are the questions that you think someone has to ask you during those kind of meetings?
Well, normally they want to know how we are as investors, right? How we're gonna help or disturb them.
Yeah.
And what I think that the best people to even say about that are the previous entrepreneurs who we have already invested in. So I always try to recommend, once we sign a term sheet with the founder, I always try to recommend them to do the diligence, like go there and look for the founders that we have already invested in. Ask them how we are as investors, because we're going to be sitting on the board. We're going to be helping them with finding clients. we tend to be very close to the entrepreneurs that we invest in.
Yeah.
So we recommend them, like before getting our money, talk to the entrepreneurs who have already got our money and ask them how we are, right? So they will be totally without us on the table, right? We don't need, and some of them, once they come to talk to us, they've already done it before the term sheet, you know, because it's a thing that it's not only the investor choosing the entrepreneur, it goes both ways, you know. It must, you know, we want to feel that we are being also chosen, right? In the best deals, it goes like that, right?
So before we finish our talk, if you, and this is a question for both of you, if you have one thing, one message that people that are here listening to us and people who will watch this discussion afterwards on YouTube, one message for founders. We are in an environment that is much more risk averse than a few years ago. Liquidity is not as abundant as it was a few years ago. So one piece of advice for founders who want to have doors open with VCs.
I think the journey of being an entrepreneur is always hard. Sometimes if you're very, very lucky, it's not, but delivering, being an entrepreneur is very hard. It's every day more than 16 hours of work. You go to sleep thinking about your problems at work and wake up in the middle of the night thinking about them also. So the word of advice and the word of is just to be resilient. We need to be resilient. I know it's sometimes a buzzword. Resilience is the main characteristic of entrepreneur. If you're not resilient, if you tend to fail under pressure, you have to think a little bit more about your career, because it will not be a walk in the park. No, it will be a hard journey, and the challenges are pretty big. And getting clients and developing a solution that makes sense, and fighting off competition and yada yada, and having a lot of employees. Everybody has their needs, their problems, their lives, so it's very challenging. So resilience is the key.
What about you, Richard?
Oh, it's a long, you know, it's a marathon. So I always expect and try to invest in founders that are really in love with the problem. It's also a cliche, but it's true, you know. Yeah. And specifically the ones that have some kind of cause, trying to solve a cause in something big. But in terms of advice, I would say that don't do what you love. You know, do what you're good at. You know, find something that you're really good, and go all in on that. What you love might not hold you for a long, you know, for the long term. But what you're good for sure will hold you. You know, so that's my main advice.
Oh, and we managed to stay 20 minutes without mentioning AI, so...
Okay.
Amazing. That thanks to you, man. Yeah.
Rodrigo Comazzetto, Richard Zeiger, thank you guys very much, and I hope you're going to have a good time here in Web Summit Rio.
Thank you all. Thank you.